Welcome to this very special edition of FS Brew Podcast, conducted in collaboration with MEECON 2025. FS Brew is the only podcast in the Middle East that is focused on insurance subject matter. I'm Vidya. I'm the co-founder and co-host of FS Brew.
Hi, I'm Renjit. So let's talk a bit about MEECON. MEECON has been established to focus on all forms of energy and insurance-related issues in the Middle East, and also to examine the issues and challenges that lie ahead as the region transitions to a greener, cleaner form of energy.
We're speaking with Sunil Machado. He is the head of power and infrastructure at Lockton Insurance Brokers. Sunil, it's great to have you with us today.
Pleasure, Vidya.
Awesome. Let's talk about Lockton's approach to risk management in the energy sector, right? You have a dual power. You have a very strong regional presence. You also have a very strong global expertise as well. And in the recent past, I think you have augmented more with the global expertise. How are you using this whole dual power, leveraging it for your clients here, especially on sectors around renewables, hydrogen, and grid?
Thank you for inviting me across, and it's a pleasure. Lockton MENA play a very strategic role rather than just placing standard cover. We have a dedicated and diverse team in Dubai, which services across Middle East and North Africa, as well as CIS. We've got a large office that sits in London, and we leverage global presence across infrastructure as well as renewables. This helps us service large international carriers as well as upstream, midstream utility markets and renewables and power.
Nice.
Perfect. Let's talk a little bit about energy storage. Now, battery storage is not just a technology, but has become a strategic risk instrument in today's energy transition. So from your vantage point in Lockton, how are industries in the Middle East, especially utilities, heavy industry, logistics, using this battery storage to manage operational continuity and supply chain risk as they navigate this transition?
Battery storage, especially large-scale battery energy storage systems, is more than just a technology to store energy. In the context of energy transition, it's recognized as a strategic risk management instrument across multiple dimensions. Battery storage plays a dual role of supporting other power technologies. It supports the grid, supports renewable integration as well. It also works as a risk mitigation mechanism across operational, financial, and systematic levels. Storage helps the project optimize revenue and hedges across volatile pricing as well. I think the main thing, it mitigates a lot of project interruptions and risks.
Yeah, we read about that quite extensively. Super.
Yeah. And let's take a look at the emerging alternatives. And obviously, lithium ion is the mainstay right now. But what else are you seeing in terms of hybrid risk mitigation strategies?
Yeah. So when you look at alternatives beyond conventional lithium ion systems, there are a lot of emerging and hybrid risk mitigation storage approaches, especially in the Middle East. Sodium ion, it's quite unique. So you use sodium rather than lithium, leveraging more abundant, cheaper raw material. We look at it, there's a reduced supply chain risk with it, less flammable electrolytes. So from a thermal runaway perspective, there's a lot less risk as well in it. Additionally, when you look at hybrid storage systems, there's a lot of hydrogen being used with battery.
And I think we're good that you highlighted the supply chain issues. We are seeing the fight on the rare earths that's going on in the world, and it's a key point here.
Yeah. No, but such an evolving space, even with hydrogen as well, as there's a lot of things to be explored as well. Yeah. So coming to how insurance can play a critical role in this whole scheme, when you take up a power project, there are multiple and diverse stakeholders, right? There's financiers, there are project owners, there are developers, there are governments. What sort of coordinated actions goes in to make sure that you de-risk the power project and accelerate, which is so important? And I think insurance plays a critical role. Elaborate for us, what's the role insurance can play?
Insurance and risk advisory are not merely reactive tools, right? Yeah. They're strategic stakeholders. Absolutely. At the end of it. I think when you embed insurance early into a project design, it's fostering transparency across the ecosystem.
Yep.
So technically, when you look at de-risking capital, Lockton and other insurance advisors can basically play a big role in those aspects and mitigating, helping stakeholder incentives, actually accelerating timelines. Yeah. I think the result, when you look at it, is more resilient and sustainable power infrastructure pipelines that come across.
I think there's just a lot more awareness that needs to go in from the corporate side to make sure you bring in the insurers at the table at the very front of conversation, isn't it?
Exactly. They need to be actually in the forefront. When you look at it, insurance is technically on any power project the second largest line item. So nobody realizes that. Insurance does play a very key role.
You said governments. So obviously there's a question on policy and regulation. There have been some enabling regulations in the region. But which sort of policy measure or regulatory framework has had the biggest impact in both accelerating renewables and even the hybrid and the conventional power projects?
I think clean energy has been key. A lot of people are looking at decarbonizing 2045, 2050. And when I look at UAE and the energy strategy for 2050, that lays a clear roadmap on what they're looking at moving forward. So UAE is really looking at raising the bar and tripling the contribution of renewable energy by 2030.
Right.
To make sure that they go across into a clean energy strategy by 2050. Apart from these, Saudi has also got a large national renewable energy program which they put into place. They are looking at 5.3 gigawatts of solar coming into place now, but Saudi itself is looking at 88 gigawatts of renewable energy by 2030. So of projects coming.
I'm assuming some of this will be allocated to all those AI data centers that are being thought of.
That's correct. Data centers require a lot of energy. At the end of it, renewable energy plays a key part in it. If you look at recently a large data center in the UAE, you require a minimum of a gigawatt of power capacity. UAE itself is looking at that through renewable energy completely.
Got it.
For context, would that sort of light up the whole Riyadh with that sort of energy, or half of Riyadh, or a quarter of a Riyadh?
You require a lot of energy across, depending on the amount of construction, the amount of work that's great, the consumption that's there across. So when you look at continuous energy development that's happening, Saudi itself, 88 gigawatts of power.
Yeah.
They're looking at the Winter Olympics actually coming across in a few years.
Thank you so much for sharing your perspective, both from the client side and also from a broker side. Thank you so much.
Now we are joined by Sam Foster, Director at Lloyd Warwick, one of the leading names in energy loss adjusting. Sam's career has taken him from offshore rigs in the North Sea to large refinery and power projects across the Middle East. Sam, welcome to FS Brew Podcast. And this is a very special episode that's being conducted in collaboration with MEECON 2025.
Awesome. Sam, you've built and led really large adjusting teams in the Middle East from scratch. But tell us, what's the hardest part of scaling technical expertise in the region? Is it the cultural and the very nuances that one needs to navigate, or is it very tough to procure talent? Tell us, what are the challenges specific to this region?
Where should we start?
Good one. I think I first came out to the Middle East in 2013. It was a new proposition that we were building in the Middle East. In order to build and scale, first of all, you've got to bring the business in. One thing that we did is implement international service standards to the region, which created a standard approach that insurers and all stakeholders could rely on. And ultimately that built trust with our clients. Once the business started coming in, then the problem starts. How do we scale that? And so you touched there on talent, and we need to focus on that, because as a loss adjusting business, you can only go so far as a one-man band. So we're dealing with billion-dollar accounts now, and one-man band loss adjusters, for me, I think, are a single point of failure in the claims process. So we set about to try and scale the proposition by bringing in new talent. And it takes a certain individual to be an energy loss adjuster. One day you're in boiler suit, crawling around a plant underneath a gas turbine. The next day, you're in your business suit, sitting in a boardroom with claims managers and reinsurers. So you got to have different skill sets and be able to adapt and be adept in both of those environments.
So the JD looks quite vibrant for that.
I think so. It is hard work. We do long hours. We're held to, and we hold ourselves to very tight deadlines. I see our product that we deliver as facilitating the claims process. And without that product being able to deliver it to particular service standards, the claims process can break down. So for me, we really pride ourselves on delivering that product so that all of the other stakeholders can make the decisions and really drive those claims forward to resolution. For me, the next challenge, particularly in the Middle East, that I found when we're trying to scale is the regulatory framework. And you both, having worked in the industry, working in the UAE is different to working in Saudi, is different working to Egypt. And then we've got these new emerging markets of Kazakhstan and Uzbekistan coming into the MENA region as well. What we need to do is adapt to those insurer requirements, those local insurer requirements, ensure that we're compliant to the local regulations. And that requires a lot of work ensuring that we've got the right partners in those countries, we've got the right offices and the resource again in those countries. And for me, being Lloyd Warwick now being part of the McLarens, it's a really nice match. At McLarens, we've got 230 offices in 45 countries. So we can deploy resource on the ground pretty quickly. And we also have those local regulation requirements in place, which takes the pain out of that scaling.
It is. Makes sense.
Now let's talk a little bit about technology and data. Everybody's talking about digital twins, IoT sensors, and now AI-driven drone-based inspections and whatnot. So with all this technology, do you think the adjuster's role is going into the background a bit, or is it now more defined and sharply in the center stage?
That's a good question. I think in the commercial and retail space, the loss adjuster's role will go more into the background because it's going to become much more automated. And I think the personal element of that will fade away. In the energy space that we operate in, I see the loss adjuster role being even more critical on the use of that technology, how that technology is deployed. Is it deployed correctly? Is it deployed effectively? And I see it as a really exciting time to be in the loss adjusting space. You talk about data and digital twins and the rest of it. AI is a broad brush term of general deployment of technology that we can utilize. And it's like anything. It's different tools in your toolbox that you bring out and deploy at different stages on different claims. No two claims are the same. So when I look at data in the claims process, I'd like to split that into two components. Really, the first part of data is what are we doing when we're investigating causation and scope of damage and the required repairs. Now, some of the tech that we can use there is now fantastic. We can get drones in the air. We can deploy video surveys that can create 3D models of plants. We'll see tomorrow at the conference with Delta Scan some fantastic uses of those technology in different types of claims. And one thing that's really exciting about that for me, in a large-scale fire loss or refinery explosion, for example, we can deploy this technology and memorialize the damage basically on day one or day two. And for us, if we can memorialize damage and we can compare that to a pre-loss scenario, then we can conduct what we call material takeoffs by comparing those two models. That feeds into quantity in terms of damage assessment, and quantity feeds into cost. So it really streamlines that whole front-end element of the claims process, producing essentially a product that says, this is now what the claim's worth. And crucially, we've got these models where we can literally walk around the plants. And if there's a dispute in the claim process, 18 months, 12 months, perhaps it goes to litigation, we can pull back to that model, look around, visualize, and actually say, that pipe wasn't damaged. Why was it being claimed? Or here, there was a pre-existing defect because we're comparing the two elements. So that's, for me, the really exciting front end. And then you've got the more administrative side of the back end of a claim where we're auditing and adjusting the claim that's presented. And we've got some really exciting tools that we're developing right now on how do we scrape unstructured data from claim submissions, formulating that into a structured manner so that we can then read, extract the data and use that in the adjusting process.
Very interesting.
Absolutely.
No matter how many times we tell an insured, in the event of a loss, set up what we call a work breakdown structure, feeding into a cost breakdown structure so that you can present your claim in a structured manner. 9 times out of 10, we will just get invoices, timesheets, everything thrown at us, and it'll be pick the bones out of it. So what we're doing at the minute is we're developing tools where it's not us picking the bones out of that anymore. It's the AI tools that are looking for keywords in this unstructured data, pulling all of that data in, and then presenting it in a useful format. People talk about AI replacing jobs. I think it's replacing the administrative element of it, turning that into useful structured data to make the human element much more effective, much more efficient. And if I look at how exciting that is for the adjusting process, it's all the boring stuff that we used to have to do, which is now being done for us. And that is a very good proposition, I think, for all stakeholders, because it means we're really making the claims process a lot more efficient.
Yeah, nice. And ideally, you want to utilize your adjusting leaders' time on useful value-added stuff.
The ambiguity. And then also from a client side, you are able to get them back on their feet.
Yeah, so if I look at an example, let's talk about renewables, let's talk about solar. In Saudi, Vision 2030, Mohammed bin Salman wants 58 gigawatts of power produced by renewable energy by 2030. Okay. That's about as much power as the UK currently produces.
Oh, nice.
40 gigawatts, which is the majority of that, he wants to produce from solar. And just to put that into perspective, that's 5 gigawatts installed per year from today.
Wow.
What does 5 gigawatts look like? That's about 25,000 football pitches, soccer pitches, covering land mass that was previously desert. So what are we doing? We're covering all of this land mass in engineered structures, and we've got wind happening there, we've got irradiance from the sun, we've got all of this tech being put into place, and then, a loss might happen. With this new AI tech and drones and all of this technology, we can compare how the plant was operating before. We can survey it using drones and technology afterwards, and we can make that claims process a lot more efficient. Without that data, 15 years ago when I was doing the first solar losses, we'd have to take a panel off, we'd wash it, we'd clean it, we'd put it in a container, we'd take a picture of it to see if it was what we call micro-cracked using this electroluminescence technology. Now we can liven up a plant, fly a drone over with thermography, identify any cracks, any geometrical discontinuities, and then we're starting talking about damage, quantifying damage. Tech for me is, if an adjuster is not adopting it now, they need to pretty quickly, because it's really a game changer in how we're handling claims.
So it's not that AI is going to take it's a person who is not using AI is going to be overtaken very soon.
I just say it's another tool in the toolbox that we can deploy.
That's good. That's really good. So here's a thought experiment, right? If you could redesign the entire energy claims process using all the tech stack that you spoke about, what would it look like? What would the ideal world look like? All the regulators speaking to each other and the tech sort of magically doing the work.
Look, in the energy space, we work in a subscription market. The projects, the assets are billion-dollar risks, and they rely on each insurer, reinsurer taking their own portion. And that has developed over hundreds of years since the marine market, and it's a well-established principle. But in its own right, it's created challenges because each insurer, reinsurer has their own system. Each broker has their own system. As a loss adjuster, we're trying to produce a product that somehow interfaces with all of those different systems. And the way that we do that at the minute is still writing a report, which feeds into multiple people's Outlook inboxes. They then read that report, take the pieces that want from that report, and they feed it into their own respective systems. Surely in today's world,
there has to be a better way.
We've scratched our heads for years. Do we still have to produce reports? Is anybody reading this stuff?
That's true.
So, and we know there is value in these reports, of course, but if I were to redesign the claim system, it would be that there is uniformity across the landscape, that different systems are not seen as USPs by brokers, that insurers and reinsurers are all using the same platform. Fair enough that they take their own value from that, but if we can interface directly with a system to produce the information that is needed for that bigger piece, then it really takes that process of production of report, feed into system, disseminate. I think it would really accelerate that whole process.
Which sounds like a doable thing.
And I have to mention fees as well. And you talk about scalability and how we increase and service providers, but for us, if we've got a subscription market of 40 insurers and reinsurers, imagine if somebody paid, if you wanted your bill for today for doing this fantastic podcast, you had to collect that from 40 different people. That's essentially what we have to do. And there isn't one system at the minute that enables us to do that. And it does mean that we are a year or two to receiving some of our fees, which can and does slow growth because cash is king, capital's king, and we can't invest.
And this is, I think it's a little bit of an issue in the region as well with other industries as well. So I'll share that. So listen, I think that was a great point of view. It made us look into the future. So huge thanks to you, Sam, for joining us and sharing your perspective on this complex world of loss adjusting in the energy space.
Thanks for having me.
Welcome to the FS Brew Podcast. It's a very special one, which we are holding in collaboration with MEECON. So this is the land of conferences. Why do we need another conference and on the subject of insurance?
The reason that we started the conference here, particularly Middle East focused, particularly relating to insurance, is because I think that the region's handling of the transition from what I call traditional fossil fuel energies is just so interesting and so different from what people are trying to achieve in Europe. And I think the only way that you can examine it in detail is actually by being here, seeing what's going on, and talking to the people that are driving that change. The fact is that this region grew out of fossil fuels. And so the way that the region handles a gentle phasing out of fossil fuels over a much longer and extended period than we appear to be doing in Europe is what I will call the grown-up approach to energy transition.
Okay.
And that gives the insurance industry and the insurance market greater challenges in how it goes forward. It's a different focus than we see in other parts of the world, but especially in Europe.
Right.
Nice. So somebody who has to grow up quite quickly, obviously it means it comes with some sort of challenges, but opportunities as well.
I mean, tomorrow, one of our guest speakers, Professor Tom Scott, I've just had the privilege of spending an hour with him and talking to him about what his role is in the nuclear industry, for example. And he explained to me that what he does is he specializes in disruptive energy technologies. Now, shock horror for the audience of the podcast, that is not solar and that is not wind. So I think that the way that this region is handling the transition is much more advanced than we're looking at. And I think that is driven by the fact that you can't just pretend fossil fuels don't exist and don't happen, because they actually drive the finances and the economics of the region.
Absolutely.
Indeed. And you touched upon the whole conference theme tomorrow. Tell us generally, what's the overall theme for MEECON 2025?
So overall theme for MEECON 2025 is we will be looking at some of these new technologies. So battery storage, everyone thinks of like what I call a battery that will catch fire at a moment's notice is the normal battery storage that we look at. We're going to be talking about the new wave of technology that's coming through, which is diamond battery storage. We're going to be looking at carbon capture, which again, I think I had the privilege of talking to Professor Miles Allen about 4 or 5 years ago. He actually coined the phrase net zero, and he is a big fan of carbon capture and storage. So we'll be looking at that, but we'll also be looking at the challenges that the insurance industry now faces with insuring mega oil and gas projects, because that isn't going away anytime soon. So we have to be very grown up about how we look at it and how we dissect it. And then we'll be finishing with a look at the nuclear industry and in particular small modular reactors, because again, this part of the world, it will play a significant role in providing energy for.
Nice. Talk about it like a teaser. So would that be the theme for MEECON next year?
Yeah, so next year, as I said, not to spoil alert for next year, but so this year it is more of what I'd call a helicopter view, looking at SMR, small modular reactors, general nuclear power. But next year, we're going to do a much deeper dive into the technology available, the advancements that have been made, and hopefully we'll get one of our guest speakers who is the world's leading expert on this sort of stuff to come back and tell us the advantages and what's going on.
Fabulous.
And this seems to be the season for nuclear power with AI data centers requiring a lot of energy.
I haven't got the figures at my fingertips, but I think that your data center capacity in region is set to grow by 100% between now and 2029. So that's on a very high growth curve and obviously is very power hungry. Also, the Arab world is a 50% user of desalination in the world, standalone power in specific locations where it's very difficult sometimes to run transmission lines. If you've got nuclear power, it makes it easier. You can be closer to some of the data centers and the desalination plants.
And luckily, unlike in some other countries, you don't have these NIMBYisms and stuff like that.
Again, I don't know how successful you'd be being a NIMBY in certain parts of the Middle East. Probably not that successful. But the reality is that in Europe, we do have accidents, but the reality is that nuclear power is a clean energy source in reality, and it is very renewable. I know we have to mine stuff to actually make the power source to start with, but the reality is it's much easier doing that than keep putting up should we say, wind farms that maybe have a 15 to 20 year lifespan, an SMR is going to have a 60 to 80 year lifespan. So once you've built it, it's going to last 4 to 5 times the length of a wind farm anyway. And the fact is that wind farm technology moves on so quickly as they get bigger and bigger, everything becomes obsolete, whereas nuclear energy gives you the opportunity to run something for many generations.
Hopefully, it is dug quite deep inside.
Absolutely.
Yeah.
But there's just so much to learn. There's so much to know. There's so much to constantly evolve towards. And I think it's a good thing to have.
But also, the thing is, we keep this very regionally focused. Most of the attendees will be from region, either live here or work here. There are people will be coming in from parts of Asia and specifically the UK. But what you learn here, you can then take back as well. That's the other thing. Because if you don't know this area or visit this region or have no reason to come here for business, you tend to think Dubai as more of a holiday centre than a hub for technology. Whereas it's only part of the Middle East, and the advances they're making in technology here, I think the rest of the world can learn from.
Right. Absolutely.
Last question, Alan. Somebody told me that it takes more time to become a CNE engineer or an energy underwriter than to become a neurosurgeon. I don't know if it's true or not. So how are you kind of bringing out the next generation of talent? What do you guys do?
Yes.
I'll make a flippant comment to start with. I would rather have a neurosurgeon operating on me than an underwriter.
Yeah.
But
risky.
One of the drivers for the conference is it's very much a not-for-profit conference. Last year was our first year. This year it's grown considerably, the amount of people that are attending and sponsoring, and that is generating income. And that enables us to put that income back into the next generation. So the conference will start an academy for the youngest, the brightest, the best, to bring them through, to be part of what we're trying to achieve here, and to get them to speak, get them to come up with their own ideas. So hopefully, if we catch them early enough, they'll grow into people that think the conference is a great idea as well.
Nice.
Perfect. Very good. Sounds very promising. Great to have you on this podcast, and look forward to the conference tomorrow.
Fantastic. Thank you very much.
Thank you.
So we're speaking with Julie Kimmens. She is the head of technical risk claims at Star Insurance Companies. She has over 25 years of experience managing complex technical risk claims in energy, property, and specialty sectors. Julie, welcome to the podcast.
Thank you very much. That's okay. Thank you.
Awesome. Julie, you've handled some of the most complex technical risk claims over the year, right? Tell us, how is that different to managing renewable claims and hydrogen-based claims?
To be fair, probably not that much different.
Really?
So the losses that we're seeing coming out of the renewables energy market versus the traditional oil and petrochemical is different through new technology, but not necessarily so different from handling the claims themselves.
Okay.
A lot of these policy wordings have the same coverage, have the same exclusions, regardless of whether it's a renewable company that's insuring their business or whether it's the traditional
petrochem.
Exactly.
Got it.
The losses don't tend to be as large as an oil refinery or a petrochemical company. The renewable markets are much smaller operations. So, whether it be hydro, whether it be wind, whether it be solar. The losses seem to be smaller. And I've not really seen any catastrophic losses in that market yet. It's quite a new. The renewables have been around for a long time. Wind, solar, and obviously wind turbines are getting bigger. Solar plants are getting larger.
Yes.
Because you get a lot of hail damage. And obviously all of the same it's just on a smaller scale we're seeing at the moment. I think it will
change as a trend.
Exactly, yeah.
Perfect. Claims used to be, in my time, paperwork, phone calls, good old days. Now it's drones, sensors, AI-assisted reviews. People are talking about, will it take on the role of the claims? I want to hear about, what do you think about that? But where is technology genuinely going to make a difference in your teams and in your work life? Tell us a little bit about that.
I think AI is the future. I don't think it's ever going to replace a claims handler or a loss adjuster. There is too much grey
Judgment.
areas. I think AI, drones, all of that footage for finding out details of the claim, getting access to environments that are unsafe, buildings when they've collapsed, where there's chemicals that are unsafe for humans to be there. We see some fantastic AI where they can basically send in a drone, map it all out and see what it was previously versus what the damage is without actually sending a human in there. Claims processing is evolving, is getting better. The decisions that can be made by AI, if you program it right and give them the right information, but it's never going to change when you have to sit face to face with a client, with a broker, and then
explain,
and then have that discussion about how much you're going to pay them when they So I don't think that will probably ever change. It will become less, I think. Risk claims, like in the construction world, more and more will get actioned by AI, I think. But the complex stuff that we see, I think it will still need somebody to be able to know that area of business and be able to sit down with a client and a broker.
Absolutely.
You spoke about data, right? If you don't feed the AI proper data, it's not going to be able to make decisions.
Exactly, absolutely. And the more data you can feed into systems that organisations have in regards to assets that insureds have and OEMs when you get their assistance and all of that, the more data you put in, the more response you're going to get out.
Yeah.
If there's missing data, it just makes, you're just not going to get the output that you want.
Yeah.
And it will always come back to, as I said, some of this stuff is extremely complex.
Yeah.
And I think there's always going to be the face-to-face negotiation.
Yeah.
Absolutely. I think so too. So we understand there are new technologies like hydrogen and battery storage. They've become very critical to energy projects now. What are the new sort of loss scenarios there? Is it still the same fire leaks, or is there any sort of new complexities that comes with it?
Hydrogen, there's complexities around storing it, and obviously whether it leaks, if it's going to be flammable.
Visible, I understand that.
No, it's clear. So there's obviously challenges around that and increased risks.
Yeah.
And also it's the conversion. It has to be converted into hydrogen and then to convert it back to energy. So there's additional risks associated with that. Battery storage, we're seeing all the time, 9 times out of 10 it's fire. But battery storage is easy because you can access it straight away.
Yeah.
And we're seeing quite a lot of increased battery storage in vastity. So obviously they're trying to store as much as they can.
Buffer energy source or whatever they call it.
Yeah, but realistically, just fires on battery storage. We've not seen anything more challenging than that. But then hydrogen, if it leaks, so you have a vapor leak and then you're going to get an explosion probably, and then you're going to get fire. So that
So severity is quite high.
Risky. But
So are the insurers pricing it better or accurately? Is there reserving done accurately by your smile?
Touchy issue.
I think I would hope that our underwriters rate their risks accordingly. But
And
yeah,
as an
it's-
industry as well, I think it's evolving.
And I think that anybody that is dealing with storing energy, especially hydrogen, will have done their risk assessments and would be aware of how and what needs to be done. 9 times out of 10, our clients are pretty good at what they do. And we're here when they have an incident that's unfortunately probably not down to their error or down to their fault. It's something that's happened.
Okay. And is the claims process stepping up to these new risks as well?
So we're seeing losses in those areas. We have battery storage. We've seen a few fires. Hydrogen, I have seen where we've had it's leaked, which is normally down to like failure of the vessel or pipes.
Right.
And then obviously that's then ignited. Find an ignition and it's ignited.
Process is very similar to what you would apply for your traditional
We
sort of
haven't
industry.
increasing claims due to hydrogen or battery storage.
Let's talk about the process itself, right? You've seen some of these large technical claims unfold in real time, and you've seen engineers, lawyers, clients, unhappy clients, all in the same room. So what's the sort of one case that you'd bring out and say, which kind of where communication or decision-making really made a big difference and it was under high pressure situation?
I think communication is key. Meeting with the client and meeting who is responsible, the risk manager, or if they have a team in place that are going to be there to support the loss they have. And also I think that from insurance side, having the right experts on board as soon as possible and getting them out to site is key, dependent on the type of risk. First, safety's priority at first, making safe sites, then having a team together that work together, that communicate together. Because if there is a miscommunication, some insureds don't have big losses and then all of a sudden they'll have a huge loss and they're not familiar with how to manage that. And I think that's down to insurers to be able to put those steps in process to make sure that they have the right loss adjustment teams and the right experts. And obviously, we're here to get the insured back pre-loss as soon as possible. And it is all down to communication.
It's almost like you need a sort of a war room approach sometimes.
Exactly.
And there's a bit of a crisis management team on top. And it's almost like that, right?
Yeah. And there are lots of different disciplines that, especially when you involve a lawyer, because there's an issue in regards to potentially it might be a quantum issue or it might be a coverage issue, it might be a dispute. And I just think you just have to be transparent. If there is something within the policy that you think may not be covered, and if you don't communicate that to the insurer up front, you don't want to leave it till the end of the loss and then have to deal.
That's not...
and they're difficult conversations. Nobody wants to hear that perhaps they're not going to recover everything that they've had to spend. So you just I think it's just about transparency and communication.
Basics.
Back to basics.
Yes, that's very good.
No, that's great. And thank you so much for chatting with us.
That's absolutely
a
fine.
great
My
chat.
pleasure.
Awesome.
Thank you very much.
We're speaking with Sean Pearson. He's the underwriting manager and construction regional product leader for Liberty Specialty Markets across MENA and Europe. Sean has spent nearly 2 decades in construction and engineering underwriting for companies like Zurich and Liberty. Sean, welcome to FS Brew Podcast interview.
Thanks for having me. Thank you.
Awesome. Liberty Specialty Markets is deeply involved in construction risks in energy sector, right? So areas like carbon capture, hydrogen, renewables. Now, it is in a very sort of nascent, evolving stage, especially in this region. Tell us, what are the unique challenges and risk factors you are observing whilst underwriting these large-scale projects?
Okay. Thanks for the question. So the key point there is large scale. If we look at the pace of development in the region, I think if we go back 2014, 2015, and we think about power generation in the renewable sector, we were looking at 50 to 100 megawatt installations, whether that be onshore, wind or solar. We're now looking at 2 to 3 gigawatt installations. So with that comes a unique challenge in terms of the scale up, the sort of the capacity that we as reinsurers are having to deploy on these projects. In the construction market, we write to EML, so we're looking at what's the maximum sort of foreseeable loss of a project. And those numbers are increasing because a lot of clients are now buying delay and startup cover, or on the operations side, BI. And that adds to the overall EML calculation, which drives our capacity. So that's probably the main challenge. But then I think if we then start to look at where are the claims coming from these sorts of projects, it's the susceptibility to natural perils. We're in a region, in the MENA region, that has been fairly benign over the years. But I guess in the last decade, we're seeing these sort of extreme rainfall events. And some of these utility scale installations, they are more exposed to those sorts of events than perhaps a conventional power or an oil and gas facility. So that's something that reinsurers have to be mindful of in terms of how much of that risk can they tolerate on their balance sheet. And that's why you might see on some of these larger projects different coverages available, whether it be natural perils, risk limits, or higher deductibles. And then I guess the third thing I would put there is really about owner-contractor experience in this field. A lot of this technology is evolving, it's novel, it's new, and we're seeing traditional operators move into that field. And so I guess with that, it's, you're entering uncharted territory. A lot of the larger power developers or oil and gas, the conventional side, they've got tons and tons of experience, whether that's developers or EPCs. And I think on the energy transition sectors, that's not the case. And we're effectively underwriting those stakeholders. So those would probably be the three main challenges.
Okay. And let's talk a little bit about the scale and the need for integrated risk management, right? And companies have started talking about this, right? So aligned claims, underwriting, risk advisory. In practice, how does this holistic approach work? How should it work in these energy projects? So if you could share some examples of what good looks like, that'd be lovely.
Okay, so I think the way we do it at Liberty, I don't think we would necessarily tackle it any differently from any of the other sort of conventional projects that we see. But in terms of a holistic approach, at Liberty, we have an integrated business unit. We are part of a team that is ultimately trying to generate profitability, right? So we work closely with our claims functions, our actuarial functions, portfolio management, risk engineering, So if I take it back to just underwriting, which is my specialty, when we're looking at these projects, we value that technical input. That's our bread and butter. So we're looking to tailor insurance policies that are what the client needs for their project. So whether that's coverage, whether that's wording, whether that's the right amount of limit that they're buying on their project, that's the value proposition that we bring from the underwriting. Right. We're integrated as part of that business unit with claims. So there is a constant feedback loop with claims that we're going back to clients. And for example, we have databases that we will actively share with our clients because we're a global company. We have losses in all sorts of technology globally. And that's really where we can add value to developers, whether it be which contractor to choose, or standards, or building codes, or design return periods you want to factor in. Sophisticated insurance buyers, owners will talk to Liberty about that. And then risk engineering. When we're leading projects, we have our risk engineers attending on site. And risk engineering is not a tick box exercise where you're going to site and checking only whether there's good housekeeping on site and whether they're storing flammable materials away. That is important as well. But I think the value that we can add is sharing our experience of losses. Because as I say, sometimes you'll go to site, and I've been to site many times, and contractors, EPCs, very experienced project managers may have been involved in 3, 4, 5 very big projects during their career. But Liberty has insured thousands and thousands of those types of projects.
Tap into the
so we can tap it. I can think of projects where we have sat down with developers and we've identified risk. Flood is a key risk in our market. And we've talked about how we can improve the mitigations in that project to enable Liberty to put up more capacity on the project because we're concerned about the potential exposure and we have to manage that in our balance sheet. So getting the developer to, in terms of their tender documents, increase the design return period, or when they're going out to tender with the EPCs, that's something that has been really beneficial to us. And they've taken that on board and enjoyed that sort of process. We're working collaboratively with insurers. The other thing that we do, we're actually about to launch a new tool at Liberty where we're looking at extreme precipitation. I've talked about flood a fair bit already. Flood is probably the number one loss in the construction portfolio, whether that be or fluvial flooding. So particularly in this market where we have seen those extreme rainfall events, we really want to try and manage that exposure better because a lot of the modelling that we use, it's not really fit for purpose in the region yet. If you look at where some of the really large losses have been in the region, in some of the modelling tools that we use, they still show as little to no flood exposure. And is that a feature of the models, or is that just a feature of
data sets?
It's data sets, but it's also, don't forget, this is a growing region of the world. If you look at a typical city here in the region, it doesn't have the built-in infrastructure to manage extreme rainfall. So when you look at a 1 in 100-year flood event versus a 1 in 10-year flood event, there's not a big difference in the MENA region, whereas there would be in Europe or the US because there are natural mitigations there. Here, it's growing. So that's where we're trying to add value.
From what you said, it feels involving your team early on is also super critical, right? The advisory phase, the selection.
I think anytime we can get in front of clients from an early stage, that just gives us a lot more comfort when we're looking at projects. The last thing we want is to be sitting at the end of a telephone or a Teams video and actually not having that interaction with the client. We want it early. The earlier we can tackle these challenges together, the better we feel. So that then enables us to be more comfortable with the project. And that ultimately is, you'll see that out the back end in terms of how we're pricing risk, how we're putting capacity down on the risk.
You've got to get the underwriter comfortable.
If an underwriter's not comfortable or doesn't understand the risk or the project, then
that's it.
You said water is the biggest sort of risk. I would have imagined fire, but
the temperature's soaring here.
Property, if you look at a commercial property fire, maybe. Or water damage is a significant contributor to loss here as well. But no, on construction project, it's a lot of our construction projects, if you think of infrastructure, civil infrastructure, they are outside of city centres. A lot of infrastructure is rural.
Right.
So you can get significant when you get these extreme events. And they're becoming more and more.
Frequent,
recent past.
Awesome. So if you have to do a little bit of crystal ball gazing, what do you think are these trends that are going to shape the whole risk landscape, especially on this evolving risk side of things, the energy side of things? And on to that, what sort of collaboration would one need between the developers and the insurers and all the other stakeholders to make sure that you de-risk it and you actually get the project out to the market?
Okay, yeah, good question. I think these projects are becoming more and more complex. So there is an increased complexity. We're seeing that. We're also seeing cybersecurity is becoming, with the complexity of these risks, with the digital platforms that are using, it's bringing in more potential for these cyber events. So that's a risk that's growing. And then I guess also regulatory compliance type risks. We're seeing more, is the technology keeping pace, or is the regulatory environment keeping pace with the changing technology? So those probably the three risks on the landscape that we're looking at. In terms of collaboration, at Liberty, we are trying to advocate for a coordinated approach amongst insurers, developers, regulators to manage this evolving landscape. So areas that we feel are going to help, things like establishing industry standards. So adopting standard protocols, whether it be a design, operation, or integration of new technologies, enhanced training and education. So investing in training programs, promoting knowledge sharing platforms, joint risk assessment frameworks where we're working with developers and helping identify and mitigate risks during the early project phases. We don't want to be the last ones to get involved. That creates a problem in itself. Leveraging insights from digital twin technology for risk monitoring and management. Other areas, promoting research and development. I think we, as insurers, should be doing that. It's within our scope where we can encourage partnerships between public and private investors, maybe to fund research into some of these new areas. And then we talked briefly, I don't know if that was online or offline, maybe it was offline before we started the podcast, we talked about advocating for client advocacy and advocating for policies that may promote investment in this area. So those are probably the areas that we're looking at.
Fabulous. I think it's such a buoyant market construction itself in this part of the region. So it's super to get your insights on how the whole construction industry is moving along. Thank you so much for joining.
Thank you. Our guest now is Heba Tabet, Insurance Legal Counsel at EDF Power Solutions in Paris. Hiba sits at the intersection of law, insurance, and renewable energy, a space that is redefining how risk is allocated, insured, and disclosed. Hiba, welcome to the FS Brew Podcast interview that is being conducted in collaboration with MEECON 2025.
Thank you very much.
All right. So you're right at the intersection of law, insurance, and renewables. From your experience, what is the biggest legal blind spot the industry still has when insuring green energy projects?
It's an interesting one. I wouldn't refer to it as legal blind spot, but rather some sort of uncertainty. And it's basically on the framework of liabilities, because as we have a lot of stakeholders involved when it comes to a renewable energy project, to name a few, we have the developers, the EPC contractors, the OEM, the lenders, the insurers, the reinsurers. So when we have a claim or we have an incident, it's really important to know which party is responsible to pay what exactly. So when it comes to this framework, we already have in the EPC contract some provisions saying that any warranties will come first, are primary to any insurance policy.
Right.
But when it comes to its application in case of a claim, it's extremely complicated because how we will trigger the warranties and the mechanism is not quite as clear as we want it to be. So we can face difficulties there. And at the same time, it will depend on really what the claim is about. So we need to conduct from the beginning a root cause analysis in order to see whether the claim or the incident is related to a defect, or someone did something wrong, human error, or an external event. So all these elements add a lot of complication. So that's why we need to be very vigilant when it comes to a claim. And in any case, we will, of course, file for an insurance claim to protect ourselves, irrespective of the root cause analysis. That will add a lot of complexity to the process. And in my opinion, we need to draft clearly in all the contracts from the beginning who's responsible of what and in which case we can trigger the conditions and how the conditions will apply.
Absolutely. It's almost there's a sequencing of the warranty that is important.
Not to mention also something that's more complicated, it's the lag clause exclusion. Because if the incident is due to a defect, for example, and we want to apply the lag exclusion, it proves to be extremely difficult to really ascertain what's the amount of the loss that is related to a defect and what is not related to a defect, including if we have other causes linked also to the event, such as a weather event or a human error or something else.
So if an external force, got it. It feels like AI can't do that job.
Yeah.
It definitely you need a human intervention. So parametric insurance is one of those recent innovations that insurance industry can really be proud of. And parametric and data linked policies, it sounds like we are moving towards that sort of future. But from a legal lens, what does that mean in terms of new risks or liability that's not currently part of the traditional sort of wordings list?
So maybe to start with, the main difference between a parametric policy and a traditional conventional policy is really the trigger point, the basis of indemnity. So in parametric insurance, one of the major risks could be linked to the parameter itself, meaning that we need to define from the beginning which parameter will apply under which conditions in order to trigger the indemnity. It's true that parametric insurance or parametric policies are relatively easier to be triggered, and we as developers could get the money way more fast than in traditional insurance because we don't really need to prove as thoroughly as we do in case of traditional insurance related to the claim. So what will happen, in my opinion, is, especially to the Middle East, we have a risk around data that is not available, in my opinion, today in the region. And a lack of sufficient data can lead to a risk in defining the parameter that needs to be applied. And we as developers need also as well to sometimes to buy this data from a satellite, for example. So before even putting in place this policy or even knowing if the policy could be put in place, we will need to pay money in order to get the data, in order then to fix the parameter. So there is a lot of risk linked to parametric policies. Not to mention as well the regulation risk, because it's relatively new insurance policy and the regulation could move very fast.
Policies here, or is it more of a...
Today, I'm not seeing any, but it's true that natural perils in the region, especially the events that we faced in 2023 and 2024, led us to think about parametric insurance and about other insurance solutions that are available on the market.
I think because a lot of these markets like America and Europe, you've got these tech companies that provide the data. They have this amazing technology. I think that's yet to come in this region, which is why the reliance on those parameters is insufficient at this point in time.
Have good history of claims as well.
Talking about those risks, you touched upon climate. Now, obviously, disclosure is becoming very important. It's a new normal in Europe, at least. How is that shift changing the role and maybe even the mindset of the in-house counsel?
So it's an interesting one because we have a lot of European regulation that applies to us and applies to French companies as well. One of those directives that we have is the Corporate Sustainable Reporting Directive, which was adopted back in 2023 and recently this year amended as well. From an insurance perspective, we needed to have internal discussions with various departments, whether it's the engineering department or the sustainable development department, in order to see what we can really do, how we can help them to implement sufficient means in order to respond to this regulation. They ask us, for example, to assess the insurance premiums that we will pay, especially on a long term, meaning the entire life of the projects. It could be on 25 years, on 30 years as well, meaning that it's extremely difficult for us to assess this and to have certainty on what would be the premium.
Right.
If we are lucky enough, we can have insurance policies for long terms, 2 years or 3 years, but it's not always the case. So there is a challenge. We need to adapt to this, and we need to make sure that we can extrapolate in our models this premium that should apply and that should be taken into consideration. We also have a gray area on whether natural perils events that are linked to climate risk could remain insurable or not.
That's a big
on
issue.
the long term. So that's also another big issue. But this regulation allowed us to discuss in more detail internally and to find solutions and action plans.
It actually forces the issue to, which is good.
Forces us to address the issue.
Absolutely.
Let's end on a very practical. If you could rewrite just one clause within the whole renewable energy area, what would that be and why?
Actually, that's a very difficult question.
Where should we start?
But an interesting one. I would say maybe amend one clause.
Yeah.
For me, we can amend the business interruption clause or business interruption section of the policy, including debt service definition. Why is that? It's because in the claims that we are seeing today, when we want to apply a certain methodology to assess the business interruption loss, we will need to discuss this with the loss adjuster, who can apply different methodologies. They can apply up to 3 methodologies if we are talking about wind farms, for example, or more complex claims. I would say I would rather have a definition of this calculation methodology in the policy since the beginning, in the BI. Exactly. A methodology that we're going to use project by project, because each project is different. Each PPA is different. So we need to make sure that this calculation methodology responds to the PPA provisions as well. And we need to test it on a regular basis as well to make sure that it's still up to date. So for me, it adds more clarity to BI losses claims. And yeah.
Great.
Absolutely.
So,
So Hiba, thank you very much for coming on the podcast and giving us a very thoughtful view on how insurance law is interacting with the energy sector. Thank you.
Thank you so much.